Hi, this is Daniel, and you're watching Unrivaled Investing, a mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi-baggers or stocks that could potentially go up hundreds or even thousands of percent over time. I often get asked the question, Daniel, why don't you post what you buy and what you sell? Well, most of that I keep for my journey at unrivaledinvesting.com, for my journey subscribers, the Unrivaled Nation. But occasionally I do like to post about things that I am buying or something that I am interested in. So today I'm talking about actually two different key components. One is a big macro trend that I'm very excited about, which is this healthcare revolution. And the second component is me actually sharing something that I recently bought, and the reason why, because ultimately it's a stock where I believe at this point in time, the risk reward is extremely compelling, where at this point, I see very little downside, pretty much no downside at this point for myself personally, and I see potentially a lot of upside depending on how this plays out over time. I'll talk more about that at the end of this video, but first, one should understand that I believe, and I think you're going to see over time, a healthcare revolution in the United States. And the reason why is because the US spends way more than a lot of developed countries on healthcare, yet their outcomes and results are in line and occasionally worse. So it's there's dramatic room for improvement, and a lot of venture capitalists and enterprising businesses are starting to wake up, recognizing that this is a multi-trillion-dollar problem, and if you can figure out a couple of ways to make it better, you can potentially have a very lucrative business model. So there's a lot of businesses going in that direction, one of which is Clover Health. And I talked about Clover previously, and so let me do a quick call out. So here's this previous video that I did on Clover Health. If you want the deep dive on what they're doing, watch that video. That's the detailed dive. But if you want to understand a summary of what's going on, I think you can capture it in this one chart where you can see hospital admits per 1,000 patients or per 1,000 members down 22%. ER visits down 23%. And so this is the key crux of the healthcare revolution that I think you're going to see in the decade ahead that I'm very excited about, which is taking machine learning, taking adaptive technologies, things that can help with better preventative care, whether or not it's telemedicine or an urgent line that people can call 24/7, something that prevents patients and those members from having to do a very expensive ER trip that is exponentially more expensive than that primary care telemedicine or primary care in-person visit. If you can catch something earlier on, you can potentially save thousands and thousands of dollars per member, per patient. And that's the key crux. That's the low-hanging fruit, I believe, of this revolution of trying to say, well, wait a second, there's literally hundreds and billions of dollars of wasted visits, ER trips that didn't need to happen. If we can figure a way of circumventing that, preventing folks from actually doing that, there's potentially a lucrative business model. And that's the crux of what you see with Clover Health, where you see here it is, we're improving hospital admits, ER visits. The goal is to get better mortality and ultimately better profitability through machine learning. But there were several things that turned me off with Clover Health. For example, their growth was pretty lackluster given the significant losses that they were experiencing. In the first quarter 21, they called out 50 million in negative EBITDA or EBITDA loss, and only 20% growth in revenue. So that's quite a large loss for what I would say is just meh growth. I mean, 20% growth, this isn't the hyper growth that I would expect. And even their guidance for 2021, they're expecting a little over 800 million in revenue, which is still, around 20% growth and still guiding to this huge loss. So I'm turned off by the fact that this is such a money loser. They're talking about negative EBITDA of about $250 million. And so this 2021 guidance really isn't that much better. And then things got even worse as after I did that video, a short report came out. Hindenburg called out how Clover, this was Chamath Palihapitiya's SPAC, failed to disclose an inquiry by the Department of Justice. And that's a really bad look for Chamath Palihapitiya as well as Clover, saying, look, they knew that this was going on, but it wasn't even disclosed in the documents. And so Clover fell significantly on the news. Management effectively said, hey, it's not that much of a big deal. But it became even less appealing at this point. You don't know. There's often the phrase, there's never just one cockroach in the kitchen. And so that does sort of make me uncomfortable. But seeing their huge losses combined with sort of lackluster revenue growth makes me think, I wonder if there's a better play for this revolution that I expect to see. And I did buy something recently that did. There is something that I think has a much better risk reward than Clover. So what stock did I buy? First, a quick plug, if you will. So if this is your first time tuning in, once again, my name is Daniel. You're watching Unrivaled Investing. If you want to follow my personal journey, go to unrivaledinvesting.com, click on Journey. First week of the month, I call it my full portfolio. During the month, I call it a potential multi-bagger or a stock that I think has potentially hundreds or even thousands % upside. I do have a dedicated Discord community exclusive to Journey subscribers where I call out, hey, this is something I recently bought, and there'll be more about that later. And just a dedicated community of like-minded investors that are looking for companies that potentially have an unrivaled value proposition. So if you're enjoying this type of content, make sure that you subscribe, hit that like button, and if you're interested in following more detail about my own personal financial journey, go to unrivaledinvesting.com. I mean, at the end of the day, my focus is finding one potential multi-bagger, something that can go up hundreds or even thousands % can change your life journey. So if you're interested in following my journey, go to unrivaledinvesting.com about that. So let's talk more about this stock that I just bought, which started off by seeing this headline. Palantir, and I've done a couple of videos on Palantir, is making several investments in the SPAC space, one of which was part of the pipe for Babylon Health. So part of this $230 million deal for Babylon Health. I'm like, okay, so what's going on here? Now, Palantir, as I've already called out, I think it's potentially an unrivaled company. It's growing very quickly. And they have a firsthand look in terms of data usage because they're helping these companies out. So maybe they have a perspective here that, hey, Babylon Health is doing something interesting with the healthcare space. And now my interest is piqued. And then doing a little diving, I see Babylon has worked with the Bill and Melinda Gates Foundation, in terms of getting some funding to do help in Rwanda, creating sort of a digitized health system in Rwanda. So now I'm very intrigued because Bill and Melinda Gates sort of vetting Babylon Health. There have been some SPACs that are sort of shady where you put up some numbers and then you find out it's just sort of a ghost company that's not actually a real product. Here it is, seeing there's some real backing. I'm getting interested. Seeing Palantir, seeing Bill and Melinda Gates. This is sort of increasing the odds that there's real meat to the bones here. And so as I learned more about Babylon Health, I learned that KURI, or KURI SPAC, or KURI SPAC, is bringing Babylon Health public at around $4.2 billion valuation. So this is the stock that I recently bought, KURI SPAC. And what's interesting is it's a very similar business model, or at least key part of this healthcare revolution that you see with Clover, which is about lowering the number of ER visits. And here they show, look, based on some of the evidence that we've working with a given payer that we've worked with, we've brought down the number of ER visits by 47% in March 2021 versus a year ago. 33. I mean, these numbers are way better than what Clover is. So another example of why I'm not that interested in Clover. But this is the key crux of the thesis. If you can get these hyper expensive ER trips down significantly, then you can figure out a profitable business line. Because at the end of the day, these payers are trying to figure out, hey, can we squeeze more out of here without raising premiums each month? Without raising premiums each year, could we get greater profitability this way? And you can see that sort of here in this business model, or at least how this works with the timely, highly accessible primary care enables significant cost savings, where this red line sort of shows the traditional path and how you have an office or an ER visit that bumps up the cost. So this is time and this is cost, where they're saying, hey, if you have a virtual consult here, that can actually save a lot of money versus having to go to the ER with relatively minor problems. And then you have a health assessment with your virtual consult. You create a digital care plan. Now you have a physical consultation as a follow-up to this. And once again, you can prevent this another, let's say, office or ER visit that's unnecessary, results in much higher costs. So you can develop this huge cost savings over time as you sort of build a case before it goes to the ER. That's the key crux of the start of this healthcare revolution. I believe this is the low-hanging fruit that several companies have found. Several companies have called this out. I think Clover Health is one. I think KURI merging with, or KURI SPAC or Babylon Health is another that's really leaning into this. Hey, let's use machine learning, let's use virtual consults to telemedicine to lower the cost of care. And ultimately, this leads to a win-win where people over time won't be charged as much. And here's the part that really blows me away, especially relative to the growth that I was just showing you with Clover. Clover saying 20% growth top line this year. Here it is. You're looking at Babylon Health. They're penciling out triple-digit growth. Nearly 400% growth in 2020, 300% growth 2021, and then continue to grow at this hyper growth rate. Yeah, they are unprofitable in the same league, I'd say, as Clover, expected to get profitable in the next couple of years. But I think I would be more interested, and this is the reason why in full disclosure, I bought KURI stock for myself, is because I'm looking at this and I'm saying there's a lot of optionality here that if they deliver on this, this could get rewarded in the public markets. This could get rewarded with a higher valuation over time. And I can save sort of a detailed valuation and a follow-up, for those that are interested, or maybe I'll put in my exclusive Discord that want to see a KURI valuation. But this does sort of suggest to me like, hey, if you have this type of hyper growth, this does warrant, this does create optionality of an explosive upside. And that does strike me as interesting. And so here's the final kicker that really pushed me into buying KURI SPAC, or the Babylon Health SPAC, as it currently trades around $9.90. And so let me explain why I think this is a better risk reward. So with SPACs, a lot of folks aren't quite aware, or maybe they are, but they don't fully grasp it, which is that you as a shareholder in a SPAC get to vote yay or nay on a deal. And so when I see the paperwork come through on this SPAC, if I see that the stock is still below $10, and that's effectively the liquidation value for this deal, about the cash that KURI has. If it's still below $10, I can just vote against the deal and they give the cash back, which is around $10. In which case, if it trades at $9.90, I bought shares around $9.90, I effectively get back around $10. So my downside is really like break even, maybe make 1%. Whereas the upside scenario is that, hey, people figure out, wow, this is a hyper growth company. Maybe it goes way higher in the future, potentially. That's a big question mark. Now keep in mind, this sort of setup is a limited time window, because you don't always have the option to be like, hey, I want to get my cash back, I want to get my cost basis back. That doesn't always work. It's a weird structure with SPACs that you can effectively arbitrage or capitalize on this difference. And if you don't, if it's not above $10 by the time it's time to vote on the deal, I can just say, nope, I want my $10 back and make effectively a little bit. Now, once the deal closes and you're into this being, if this deal closes and it becomes fully Babylon Health, I'm not as compelled by the thesis. But right now, when I'm looking at this risk reward, I do find it super compelling. I think at this point, I personally would prefer to see greater profitability or a greater track to getting that profitability, but I don't have to make that bet right now. I can reassess the thesis at that point. At this point, I'm really just playing a very simple game of like downsides minimal, upsides potentially a lot, versus looking at other companies like Clover where it's like, hey, it's already de-SPAC'd. As investors know, it can go well below $10, as it did previously, I believe. And so I'm not, this risk reward strikes me as way more interesting. Hyper growth, similar business model, what looks like better outcomes in terms of ER visits. Now, Unrivaled Investing Journey subscribers know, so not only did I buy KURI, there's another stock that's also participating in this healthcare revolution. I just actually posted about it in the exclusive Discord community for Unrivaled Investing Journey subscribers. I will post about it later this week for the journey, but this is the public call out for this Unrivaled Nation on YouTube that's interested in learning about these types of companies. And that's why I think this is interesting. I think the risk reward is dynamic, and it's a better risk reward setup than what you have with these other plays like Clover. Better growth prospects, better risk reward dynamics. That's ultimately why I bought that stock for myself. I'd love to hear your feedback. If you feel like I'm missing something or there's a different angle, I'd absolutely love to hear it. Leave it in the comments below. If you enjoyed this video, please make a point of subscribing. And if you're already a subscriber, I do appreciate that thumbs up. If you're excited about watching this healthcare revolution, join me. Thanks so much for watching.